Hey everybody, welcome to IIE Financial's education series on candle-to-candle trading. This is really a follow-up to a lesson that we had done a couple of weeks prior. I will put a link to that lesson in the comments below on candle-to-candle trading. Really, one of the things that's very important when we look at identifying opportunities from candle-to-candle is how those opportunities present themselves in the markets. And so we had a couple of questions come through from some subscribers and from some clients that were, they wanted to understand a bit more about how we use candle-to-candle trading in our investing, and if it's something that we can use, long-term, and why sometimes it has different results than others. So as with any trading and investing scenario, all trading and investing involves risk, and so we have to be willing to accept risk. But the risk that we've got to be willing to accept can be controlled to a degree through the use of protective stop losses. And so everything I talk about today has that stop loss element as kind of the foundation and the backbone behind it. So let's just do a very quick review of when we talked about candle-to-candle trading. So I'm just going to kind of draw something out. Bear with me. It might be a little bit rough, but I want to just kind of draw out what I was talking about when I talked about candle-to-candle trading. So, when we look for candle-to-candle trading, essentially what we're doing is we're identifying areas where price may reverse. So let's say that I have price kind of coming down into a region, and we'll just use obviously red candlesticks here. And let's say that we get a red candlestick with a long lower wick. That long lower wick that we have there, let's make it very, very evident. That long lower wick that we have there indicates that price got all the way down to here during that period and then rallied back up. Now, let's say that the next candlestick is here. So the idea in candle-to-candle trading is that once I get a candle with a higher high than the prior high of the one before, I would take an entry. Now, in this case, I don't quite yet have that higher high. It's close, but not quite there. So let's say that my next candlestick looked a bit more like this. Now, all of a sudden, we would have our entry in the candle-to-candle style, as well as we would place a protective stop loss directly beneath this prior candle. Now, if you are a swing trader and you're more aggressive and you're looking for small time frame opportunities, you may do this off of daily candlesticks. If you're more of a position trader and you're not going to be as active, you may do this off of weekly candlesticks. Now, if you're more of an investor, you may do this off of monthly candlesticks. One of the things that we do, for our clients is we primarily stick in our active trading portfolio, where we're looking at individual securities. We stick to daily and weekly candlesticks primarily for our active trading portfolio when we're finding individual opportunities. So, going back, but what happens when this doesn't work, right? What happens when it doesn't work, and why doesn't it work? Now, when we talked about candle-to-candle trading, the most important thing that we care about is when we use it. When are we going to use it? And it really comes back to identifying a high degree of probability when it comes to our opportunities. So let me explain what I mean by that. So when we have a high degree of probability when it comes to our opportunities, and I'm going to pull up a chart of a recent security that I was looking at. Now, once again, this is in no way a recommendation for this security. This is just an example of one that I'm using for educational purposes. So this is ticker symbol TEAM. Now, in this particular example, we had a very big move down in an upward trending security. So if I look at this on a weekly chart, you'll see that we have higher swing highs, higher swing lows. We've got an upward trending stock that on a daily chart had given us the opportunity for a pretty good pullback. Now, many people would look at a chart like this and consider these would consider these to be reversal candlesticks. Those two dojis right there would indicate a reversal candlestick. So if you wanted to practice candle-to-candle trading, what you would do in this instance is you would you would set up a trade to get long when price gets above the high of the prior day. Well, that would be above here. And your stop loss would be below here. Now, in this instance, you get into the trade right there and you're out of the trade right there, all in the same day, taking a loss of about $1.22 per share in this particular security. Now, matter of fact, to really rub salt in the wound, you actually enter the trade right at the open, right? So the market opens here, so you enter the trade right at the open, and you're out of the trade within 30 minutes. So literally within 30 minutes, you've hit your stop loss, and how are you feeling then, right? Well, that never makes anybody happy because they're out of their investment opportunity, they're out of their trade very, very early in the day. But here's what I'll tell you. The most important thing of candle-to-candle trading is that it's in an area that offers me a high degree of probability for a turnaround in the first place. So I wouldn't consider this a high degree of probability for a turnaround, because one of the things that's very important for me to look at is where is the fair price value area? Where is the fair price value area that I look for these opportunities? And I have talked about fair price value areas in education pieces in the past, and really that's built around the concept of trading price. If you really want a pretty good book, there's a book called Price Action Breakdown by Laurent Demir. He talks a lot about trading price action trends and he talks primarily about trading price action without indicators, without oscillators. I mean, I've got a couple of indicators on the chart, but essentially he's looking for fair price areas and for price to return to those fair price areas before then moving again. Well, a fair price area would be an area where essentially the market has determined that there's a fair price between buying and selling. And so we have that state of equilibrium, if you will, and that return to equilibrium is the most important thing. If you notice where we had these potential reversal candlesticks, it was not at an area that we would consider a highly potential equilibrium in the past. As a matter of fact, I would want to look for this area down below, and that area down below would be located right in here. Now here I see, first of all, a gap up, and that gap could be filled combined with that area of fair price, that fair balance area that existed in the past. This is where I would want to look for a potential entry on the candle-to-candle style. Now, you may miss some entries when you're doing candle-to-candle style like this because there's a chance that price just comes down, touches here, and boom, immediately shoots up. So you're not going to catch the absolute bottom with this candle-to-candle style of investing, but it does give you a good analysis. So let's take a look at another example. And the example we're going to look at here is Insperity. Obviously, another strong upward trending security. We are on a daily time period. And if looking at Insperity, we zoom in just a bit, we can see that this put in a very strong reversal candlestick. Anybody who uses candlestick patterns will recognize this as a hammer candle reversal pattern. Now, this particular hammer candle reversal pattern comes after a big move up. We got a nice little pullback, strong drop down. There was some news on the prior trading day that caused the whole market to take a strong drop down and then rally back up. And so this stock, not surprisingly, has followed suit. Now today, we got a little bit of a higher high, but without really much follow through. Well, that's probably because we don't have a high probability turning point area identified. My high probability turning point area is going to be at this area down in here where I had fair price. This is where I had that fair price area that I was referring to in the previous security. So that fair price area would be where I would then maybe look for that candle-to-candle reversal. I mean, certainly you still have the potential to be wrong, but you increase your probability of success. Everything we do should be built around my probability of success. Now, all of these positions will have protective stop losses in place in order to minimize the risk of strong market downturns. Now, there's always going to be the risk of a gap or something of those lines, right? You might have a strong gap down, like we see here in Merck. But a great example of Merck is if you were looking for a reversal candidate for Merck before this strong gap down, number one, it didn't come down to a strong reversal point. Number two, we never got a higher high. So the gap in this case should not have affected you because there's no reason you would be in this particular scenario. So just kind of keep those things in mind when looking at candle-to-candle trading. Remember, candle-to-candle trading can be a very effective tool and a very effective method in your investing and trading philosophy. At IIE Financial, we have an active trading portfolio, and one of the tools that we use to identify opportunities is this candle-to-candle trading, both on daily and weekly time periods. Weekly time periods, for example, here is McDonald's, would be using the same similar concepts, but doing it on weekly time periods, waiting for strong pullbacks into high probability reversal points, and then getting long once we have a higher high, moving our protective stop up the entire way. So this is an example of looking at something like McDonald's on a little bit of a pullback with a reversal candlestick into a high probability area. So if you have any questions, certainly feel free to reach out. Go to our website, iiefinancial.com, fill out a contact us form, and we will be glad to respond back and to help you as best we can. Thank you so much, and I hope you all have an absolutely amazing day.